Hey everyone, it's Julie here with Tip Ranks. Today we're taking a look at 3 strong buy trending stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at 3 of the best rated stocks from the past week. These stocks are trending, which means they've been picking up a lot of attention from Wall Street analysts. We're going to take a look at what has analysts buzzing on these stocks and, of course, what they're predicting for the stock's future. We found these on TipReg's Trending Stocks page. Found right at the top of the Research Tools menu, under the Trending Stocks page, we narrowed in on the best rated over the past 7 days to get a list of companies down below. I then looked for some with a strong buy rating. You can check out these trending stocks for yourself over on the TipRanks website or right on the TipRanks mobile app, which you can download using the links in the description down below. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel. Now let's dive right into our 3 strong buy trending stocks. First up, we're taking a look at Levi Strauss. Trading under the ticker LEVI, they're currently priced just above $21 per share. The stock has gained nearly 16% over the past year and is up slightly in the last 3 months, but you can see looking at this past week, it's down 14%, taking a big drop off here on the 9th. They do currently score a 10 out of 10 on the TipRanks Smart Score. Levi Strauss is an American clothing company best known for pioneering denim jeans. Founded in 1853, this global apparel powerhouse is renowned for inventing the iconic blue jean in 1873 through a patented riveted denim design that revolutionized durable workwear. Today, they now design, manufacture, and sell casual clothing across brands like Levi's, Dockers, and Denizen, reaching over 110 countries. As you saw on the chart, their stock took a hit following their latest quarterly report. Despite posting both an earnings and revenue beat and increasing their full-year guidance, their fourth quarter outlook disappointed. Earnings per share of 34 cents beat expectations by 3 cents, and revenue climbed nearly 7% to $1.54 billion. However, the company is taking a prudent approach to Q4 guidance due to macroeconomic uncertainties and potential demand impact. Higher tariffs are impacting gross margin by 80 basis points, with a significant impact anticipated in that Q4. On the positive side, though, they did see their D2C sales grow by 9% and international business grew 9% as well. That fourth quarter outlook has not dissuaded analysts, however. Just yesterday, an analyst from BTIG initiated coverage on the Levi stock, naming it a top pick in the retail sector. The firm believes the Levi's brand has never been stronger. The brand is an enormous competitive strength, positioned to drive growth and continue to benefit from casualization. We also heard from a Wells Fargo analyst who said those strong Q3 results were outshadowed by that outlook. They said that while Levi Strauss reported a solid Q3 with compelling revenue and gross margin upside as a crowded long idea coming in, the firm expects shares to give some back due to concerns around their near-term outlook combined with the questions around the rate of spend margins into 2026. So they did lower their price target by a few dollars, but reiterated a buy rating. Overall, Levi Strauss does come in as a strong buy with 13 current analyst ratings, breaking down to 10 buys and 3 holds. The average price target of $26.31 implies an upside potential of over 25%. And while some analysts lowered their price targets, others increased them slightly. Our price targets range from a hold with a downside of nearly 5% to a buy rating with an upside of 57%. For our second trending stock, we're taking a look at BlackRock. They trade under the ticker BLK, currently priced at $1,196 per share. Their stock has climbed nearly 20% in this past year, and in the last 3 months is up nearly 9%, and they do score a 9 out of 10 on the TipRanks Smart Score. BlackRock is the world's largest asset manager, overseeing approximately $11.5 trillion in assets under management. They provide investment management, advisory, and risk management services to a diverse clientele, employing strategies across equities, fixed income, alternatives, real estate, and multi-asset portfolios, while benchmarking against major indices like the S&P and MSCI. They're renowned for their iShares exchange-traded funds, which dominate the market, and their proprietary Aladdin technology platform, a risk analysis tool used by clients to manage portfolios. Their stock is trending after coming out with a solid earnings and revenue beat for their third quarter, which they just shared on October 14th. Q3 earnings per share came in at $11.55, beating expectations by 25 cents, and they saw a record revenue increase of 25% year over year as it hit $6.5 billion. Their iShare ETFs saw $153 billion of net inflows, and they saw advancements in tokenization and digital assets. Following that quarterly report, we did hear from an analyst at Morgan Stanley who increased their price target. They said that BlackRock's strategic initiatives, such as the tokenization of all asset types, are expected to broaden its investment appeal and could significantly enhance its growth portfolio. Additional growth catalysts include synergies from the HPS and GIP partnerships, advancements in AI infrastructure, and increasing demand in private markets and ETFs. With 12 current analyst ratings, the BlackRock stock does come in as a strong buy with 11 buys and 1 hold. And the average price target of $1,347 implies an upside potential of nearly 13%. And several analysts did increase their price targets following that earnings report. They range from an upside of 4% up to 24%. If you've made it all the way to our third stock today, then make sure you've hit that thumbs up button. Third on the list, we're looking at Zeta Global Holdings. They trade under the ticker ZETA, currently priced at $18.42. They are in the red this past year, down 38%, but have been climbing back more recently, gaining over 16% in the last 3 months. And they currently score a 9 out of 10 on the TipRank Smart Score. In fact, we have some very notable hedge fund activity, with hedge funds increasing their holdings by 5 million shares last quarter. Zeta Global operates an omni-channel, data-driven cloud platform that provides enterprises with consumer intelligence and marketing automation software in the United States and internationally. Their marketing platform analyzes billions of structured and unstructured data points to predict consumer intent by leveraging sophisticated machine learning algorithms and the industry's opted-in data set for omni-channel marketing. Their stock is trending as they just hosted their Investor Day on October 8th, where they focused on long-term trends around AI-driven marketing and enterprise digitalization. They provided some financial projections and guidance, saying that for 2025, their estimates on revenue growth are on track, as well as free cash flow at $142 million. They also reaffirmed their 2028 targets, including revenue of $2.1 billion, which would be a 20% compound annual growth rate from 2024. They discussed their $325 million acquisition of Marigold, which is expected to add over 100 enterprise customers and contribute $190 million in revenue in 2026, as well as showcased AI innovations, including Athena, generative engine optimization for LLM visibility, AI customer onboarding, AI agent studio, and their Argenic app suite. Zeta will share their third quarter earnings report in a couple of weeks on October 29th, and this does follow an earnings and revenue beat for their Q2 near the start of August, where they saw earnings per share of 14 cents, beating expectations by 2 cents per share. For their third quarter, analysts are anticipating earnings of 18 cents per share. During that Q2, they did see strong revenue growth, which was up 35% year over year, coming in at $308 million. Following their Investor Day, a 5-star analyst from Bank of America reiterated their buy rating. They said that the company has demonstrated a strong financial model with management confident in achieving a 20% annual revenue growth rate through 2028. The introduction of the Athena AI offering is expected to further enhance customer engagement and platform stickiness. With 11 current analyst ratings, Zeta Global also comes in as a strong buy with 10 buys and 1 hold. The average price target is $28.40, implying an upside potential of over 54% from current prices. Looking at those price targets down below, they range from an upside of 9% all the way up to 139%. So that is a quick look at 3 stocks, all trending with Wall Street analysts this past week. Let me know your thoughts on these companies and whether they were on your radar or not. I always appreciate hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, so make sure you always stick to your own investment plan. Thank you so much for watching. Have a wonderful day. I'll see you back here next time.